I'm Alan Kenny, Editorial Director with REIT.com, and we're in New York at the Waldorf Astoria Hotel for REITWeek 2016, NAREIT's Investor Forum. I'm joined for the CEO Spotlight by Chris Volk of STOR Capital Corporation. Chris, when we last spoke at REIT World 6 months ago, you told me you thought that the market for single-tenant acquisitions was enormous. Has it shrunk any since then?
No, I mean, Alan, the market is about $2.5 trillion. We started this year on a strong pace, so through April we'd done about $100 million a month from an acquisition pace, which annualized is getting close to where we were last year, which was $1.2 billion worth of acquisitions. We think the opportunities are really terrific.
You and your team seem to be out on the road quite a bit lately. Is this something that's just kind of like embedded into the company's DNA, or is this something that's more kind of focused or directed at this point?
We've done a lot of outreach. We took the company public in November of 2014 as a new public company. I think it's really incumbent on us to get our message across in terms of what STOR is and how it's a outgrowth of being in the public REIT space for the last 20 years. And we try to lead in everything we do, and outreach is one of those things. And it's backed by a lot of disclosure, so leadership and disclosure on the company. And I think some of that stuff pays off because the largest institutional shareholder we had, which was Oaktree Capital, fully exited their position, in part because of the demand for our shares. And for the first 4 months of the year or so, we were almost 20% of the new issuance of the marketplace in the REIT space. So outreach has been important.
And I know you have a pretty broad tenant mix in your properties, but what are some of the more popular or kind of high growth tenants in there right now?
There's no one sector that we're looking at favoring. The market itself is, we're in a 2% give or take GDP growth area. So I always say that flat's the new up. So we're seeing a lot of stability with our tenants. We're focusing mostly on service industries. So about 70% of what we do is in the service space, about 15% retail, the rest of it's manufacturing, industrial. And today we have 350 plus tenants, so we're highly diversified, and we don't have more than 2.5% to any one tenant from a revenue perspective, and our top 10 tenants are less than 16% of revenues, which is just unparalleled diversity in a very large market.
Thanks so much for your time, Chris.
Pleasure to be here. Thank you.
For more from REITweek 2016 and other REIT news and analysis, be sure to visit REIT.com.